And we're live. Phil Tarrant, Tom Panos, Real Estate Exposed. I've taken your introduction off your other podcast, Tom, your more established podcast, but now we're better than it, no doubt. What's it called again? $1 Million Agent?
Million dollar agent, MDA.
MDA, there you go, mate.
MDA. Yeah, we've been. I think we're up to. I don't know. I think 600 episodes. We started. John, I got to hand it to John McGrath. He contacted me 6-7 years ago. He says, I've been listening to this podcast called the Advanced Selling Podcast between two guys, Bill Casby and some other guy. Hey, Chris, coming on. And he said, we should do one. He goes, I like it because he goes, they babble on and they actually make no sense, but it's easy to listen to. And, that's what we do now. We don't make much sense, and hopefully we're easy to listen to.
Well, you don't need to really make too much sense, mate. For some reason, people are tuning into us. We must know something about property. At least you do. I'm just a humble journalist trying to get by, trying to keep the readers and the listeners and the viewers informed. But lots been happening this week, mate. Lots happening.
We've got some good people joining in. The number one agent for Woodards, Chris Tarrant, has gone on. And then Rob Trovato, one of the great auctioneers of Sydney, he's just joined us. Facebook, LinkedIn, YouTube. Sid Gandy, good to see you. We've got Michael from New Zealand. Good to see everyone coming in. There's been a lot going on. We'll obviously, and to the guys that have come on from Melbourne, Chris, great news. We believe that Dictator Dan has actually picked a day, the 26th of October, which is going to allow you to move forward, and things are opening up. Phil, and New South Wales, that's Monday. Go back into a pub, go back into a restaurant, go to JB Hi-Fi inside and, buy what you need to buy without having to do click and collects. The gyms are open. Gym junkies out there. Yeah.
Well, the question for you, Tom, is that you said that you were going to do the Bay Run every day that you're in lockdown. Is Sunday your last day?
Well, Phil, last Friday, I missed a day. I went to Byron Bay. And I missed a day. And so, Phil, but I've done it every day since then. And one day I did 14 kilometres. So Lisa's actually, by the way, I'm going to answer this question before it runs off my mind. When do the open homes start? And that's an interesting one. And I'm very interested to find out when the on-site auctions start, because, Phil, I'm going to get caught out because I've been booking my auctions half an hour apart, knowing that I don't have to drive with the onlines. And there's obviously going to be a week that I'm going to end up having to look at a contingency plan. But to all the agents that are joining in, Tim McGibbon tells me that I'm doing a stream with him tomorrow, Phil. Tim McGibbon, the REI chief executive of NSW, is telling me that he believes if you're not in a stay-at-home order, that you will be able to do opens and on-site auctions as of Monday. But he still hasn't been clear as to what defines a stay-at-home order region. And that's what he needed time to work out. So I don't want anyone taking this as meaning come Monday, opens and auctions are on. We'll get some more clarity tomorrow. Tomorrow I'm having a rant with him. So, Phil, what about your business? Where do you, on Monday, what's different in your business on Monday?
Well, we've, our base philosophy for navigating COVID-19 is to be right across the health and the relevant orders from the respective governments and just do what was whatever inside those guidelines, whether it's sort of internal type work or external stuff in our events business. We now know that Monday is, inverted commas, Freedom Day. There is some relaxations of many of the restrictions. There's still quite a few in place. But one of those restrictions that are still in place, or the guidelines is that if you can work from home, the requirement is that employers allow people to work from home. And we're going to follow that mandate here just as a guiding force. And I think that's appropriate. What everyone needs to come to terms with, and we've been chatting about this over the last couple of months, Tom, the acceptance of living with COVID. More people are going to get the virus as we emerge out of this lockdown. So as a business owner, if you're out there or you're a real estate agent, it's not a matter of if you're impacted by this, it's going to be a matter of when you're impacted by this. There will be a point in time when one of your team members in some capacity or another will come into contact with the virus, and they're either going to have to isolate or they're going to catch a virus themselves, and there's going to be ramifications for you and your business. Accept that being the fact and start planning around that now. I know schools, for example, if they get one case of COVID inside a school, the whole school needs to shut up and have 14 days under the current roadmap from next Monday. That means every single kid needs to be isolation, and therefore parents need to be isolated. It's going to get very messy, and accept the fact that that's the way it's going to be, and plan around how you can best mitigate those risks. Real estate agents, for example, I'm no expert on this, but I'll be thinking about how do you actually create buddy groups inside of your real estate business. So if one team is impacted, the whole team isn't impacted. You need to start thinking this way and being very thorough about planning for the worst case scenarios, obviously striving towards what the best outcome is. And that's going to be the reality, and that's the way it's going to be. Now, if you look out towards other parts of the world, Tom, UK, for example, which we've been chatting about how they're operating out there in the US, they've gone through this same journey. And eventually it largely just moves on and it gets its own culture around it. But at the start of this journey outside of the pandemic, we're going to have to find our way, and it's going to be messy and it's going to be uncertain. We've spoken about being a VUCA environment before, Tom, but that's the way it is. So when it comes to open for inspections, you might be allowed to host them, but if your people can't attend them because you've had some sort of COVID connectivity, you need to work out how you're going to go about doing that. You've got to think creatively, pragmatically, and quite strategically.
Yeah, well said. And I think that's a very, 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 very good message you put out there, because when you factor in that there is going to be hiccups, they're not as disappointing because you actually had expected them. And you are right. There are going to be gyms that will close. There'll be schools that will close. There'll be places that they're going to say, this is now a hotspot, right? It's not like, it's open and do whatever you want. But, and I've got to say, Phil, in the last 24 hours, I'm not going to name the companies, but the vaccination issue is now officially a problem in the real estate industry. I know of one business where the management team can't come to an agreement on the position they're going to take, and they have made decisions to actually potentially not be together. There are staff that are actually leaving businesses that have been told, you can't work here from this day and go out and see clients if you're not vaccinated. So we are going to see a little bit of people moving around. We're potentially going to see some people even leave the real estate industry. It's a deep issue. I mean, for me, it hasn't been as a deep issue as it is for some people. I've become to understand, like, man, why would you leave a company over a thing such as having an injection? But it obviously is an issue, Phil. So I think, yes, Freedom Day, or as you know, I don't think it's the Freedom Day of Boris Johnson, but the day of opening in Sydney on Monday, on the 26th of October, Phil, for Melbourne, means that don't think it's going to be the way it was pre-March 2020. There are still going to be hiccups.
Well, the main reason why, and if we remember back to when we come out of this first lockdown, which was late last year, Tom, we need to remember the reason why we came out of that lockdown was through a COVID eradication policy. When we came out of that lockdown, there's no COVID cases. So it was largely back to how it used to be. We're now exiting this lockdown on the assumption and the understanding that there is going to be COVID in the community and it's going to impact people. Very, very different set of circumstances. For the real estate sector, and if I was a CEO of a real estate business. I'm not, but if I was, I'd take some learnings from how other industries will navigate this. I would be thinking really pragmatically, and I'll be sort of focusing on the real politic of it all, where if your office is shut down for whatever reason, and guess what? It's going to happen to some offices, not all, but some offices. How are you going to ensure the continuity of your business to get the best outcome for your vendors and buyers? You may need to be thinking about strategic tie-ups with other offices in other locations where you can buddy up. So if one of them goes down, you can cover it off, vice versa. Maybe the competitor next door becomes a friend for a moment of time for the purpose of getting the best outcomes for your clients and your vendors. We're in a market right now, Tom, which is hot. We know that. We'll have a chat about how that might slow down in a moment. But maybe you've got to put aside some of the old prejudices and biases about how you run your business to make sure through this period of time, which is going to be disruptive, that you get it done, you get the job done right.
Now, Phil, there's two other issues that I want to talk about to do with real estate markets at the moment. One is the amount of stock that is coming onto the market is significantly more than we've had for quite some time. There is a lot of stock coming on the market. It appears that there's a lot of people that have basically said, well, in Melbourne, we can now show a property. In Melbourne, we know we're going to have an opening on the 26th of October. Let's get it on the market. In Sydney, that's already happened. A lot of people were waiting for, October the 11th. That time is up, and agents have, got a lot of listings booked in. And then we've also got another factor, which you spoke about before off air, APRA. And this is a major development, Phil. This is a major development. You explained it so eloquently to me on what it meant, because I hadn't read up on it. But can you tell me what's across the media today and the decision that has been made that I think comes effect next month?
That's right. Comes effect 1st of November. So this is a big story. We sort of flashed it across a lot of our platforms connected with mortgages and real estate. Our real estate business, obviously, smart property investment, and also the advisor and mortgage business. So the people involved in real estate transactions, people that are getting the home loans, the people who are taking on the home loans, the people who are organising the home loans, the broker, and then the real estate agents. So APRA, the prudential regulator, who pretty much issues directives to banks to try and shape the way in which Australians borrow money and other things, but for the purpose of this chat, borrow money. We've been chatting about it in the background, Tom, for a little while about how hot this market is. We know that we've seen about a 20% increase in prices thereabouts in most markets in Australia. Huge growth. Now, a lot of people argue that's just pepped up growth from the period of time of the last few years when it wasn't growing through 18, 19 and the early part of 20. What's happened now is APRA has written a letter to the banks in very simple terms, pretty much saying that you need to rethink how you're lending money to borrowers. Now, in really simple terms, the banks at the moment add about 2.5% to whatever interest rate you get to get an understanding of your ability to borrow money, your serviceability. So if you're getting a 3% home loan and that's what you're paying your interest on, the bank is viewing your ability to repay that debt as if it was 5.5%, so 2.5% more than the actual home loan amount. APRA sent a note earlier this week to the bank saying it's not 2.5% anymore, it's 3%. So what does that mean? It means that you're being on that same logic. If you've got a 3% home loan, your serviceability, i.e. your ability to borrow money, is being assessed by the bank at 6%. So
Phil, is APRA an organisation that actually tells the bank the rules that they must operate in?
In a really simple term, the Australian Prudential Regulatory Authority, APRA, it's a government body, and essentially their job is to keep an eye on the system of finance in Australia and make sure the rules of governing how that works is appropriate to ensure the right outcomes for Australia and Australians, in really simple terms. So they've gone, yeah, we've got to slow credit growth, because if credit growth increases, that means people have more capacity to borrow money, which means they pay more money for houses, and then houses go up, right? So this is one of the ways in which they're going to try and take a little bit of heat out of the market. If people have less money to borrow, that means they're not going to be able to buy as expensive houses. So they're trying to limit credit growth.
Well, Phil, there is a group of buyers that are definitely going to be impacted, because even I, as an auctioneer, often when I negotiate with a buyer, they often actually pull out their paperwork and they say, we want to pay more, but we can't. You know, $1 million is the maximum we can go to. What you're saying is, if we work on 5%, so 5% of $1 million is 50,000. There is a possibility that in November the same buyer will say, Mr. Auctioneer, I can't pay $1 million. 950 is where I can go to. Now the issue is, are there other buyers that are out there in the marketplace that would say, well, guess what? We'll buy it at $1 million, right? Are there people out there that dominate the real estate transactions that aren't buying at their maximum threshold, Phil? That I think is one of the issues.
Well, that's absolutely the issue. And that's the effect they're trying to generate. They want to slow down price growth of properties. Now, this on the basis, so if you're borrowing at your maximum capacity as a property investor or as an owner occupier, the sort of impact of this is about 5%. So you can borrow 5% less. So to your point, $1 million is now 950. Now that's going to shape buying behaviors and actions for a lot of people. For investors who aren't borrowing at their maximum, guess what? It's probably a good thing. It's taking people out of the market. Less people in the market, Tom, as we know, means less competition for properties, which means that price growth or the speed at which or the price at which you pay something is smaller. So for many people, this is a huge advantage. You know, if you're cashed up, ready to go, you have serviceability, and you're not buying at the top end of your means, happy days. One of the challenges with this, and we saw this the last time APRA intervened, was that this is a blanket rule right across Australia. Now, last time around, what APRA said was they didn't want banks to grow their investor loans and interest-only loans too fast. They had to sort of temper the speed of growth of that. And what that did, it made harder for investors to borrow money. Harder investors to borrow money, prices started to stabilise and in some places go down, right? That's what happened last time. So this, and a lot of people said that was a really good policy and it worked. And it primarily worked in hot markets or markets, bigger markets like Sydney and Melbourne. But it was applied across all of Australia. So you only think back to what was going on in Perth at that point in time, where property market was wasn't in free fall, but it wasn't performing very well. That impacted that market, slowed it down for another period of time. Hence the reason why now you're seeing Perth fire for the last sort of 6 months or so. So this application is for all borrowers in all areas of Australia. Now the argument would be, well, if I'm financially responsible and I'm not borrowing beyond my means, and I have proven history of 10, 20 years of effective buying and selling or investing in property, why should this apply to me? You know, why do you need to intervene? Because I can manage my own finance. I can manage my own debt levels. I can manage my own expectations. Doesn't matter anymore. So that's the environment we're moving into right now. It will have an impact on property prices. We need to remember that the Reserve Bank of Australia has pretty much come out saying we don't want to lift rates for a period of time, 2023, 2024 maybe. We want to keep it all-time low at 0.1%. Guess what? RBA is having its cake and eat it as well. They're able to manipulate some of the outcomes they want by intervention through policy, through APRA, while at the same time keeping interest rates at record lows. So some would say it's smart policy, smart intervention from the government. Those people, first-home buyers, for example, who have their eye on a dream home of $1 million, guess what? It's out of their reach now, Tom.
Well, I would say it's not disappointing news. It's actually pretty much the advice that they probably need to get from someone and they weren't getting it. And that is, does it make good sense to be borrowing up to the last cent that's available for you? So maybe, Phil, this isn't such a bad story for the real estate industry, because if there are people that shouldn't be buying property at the moment, and they're not making the decisions themselves. It appears that an external party is now going to make that decision for them. Do you think prices will get impacted, Phil?
Yeah, absolutely. But does it mean that property is going to turn on its head and go south? No, I think it's just going to slow the speed of acceleration of the growth that we've had right now. And some would say that's appropriate. You know, we've got 20% increase thereabouts in most markets over the last year or so. A lot of that is growth from a lower level, because remember, prices come back in most markets prior to COVID-19.
I'd love to ask the people, our audience that's on live right now, put in your comments, what do you think APRA new rules are going to do to real estate prices? I've already had some coming in. Rob Trovato, the auctioneer, says this will have more impact on first home buyers.
Agreed.
We've got Rachel JB says, which will then overall affect house prices. In New Zealand, same thing happening here in New Zealand with the banks imposing strict servicing criteria. This is coming from a very successful mortgage broker, by the way. Michael, he comes from that industry, and it's obvious that that's happened there as well. So, Phil, do you think it's going to happen at the prestige end and at the low end? Have you got a view on that?
Well, I feel for a lot of first-time buyers, Tom, because it's going to change maybe how they go about buying property, where they buy property, and when they buy property. It might mean they need to save for a bigger deposit. And look, you know, saving levels in Australia is the best it's been as a result of COVID-19, but it's absolutely going to impact first-home buyers. But then again, maybe that's fine, because maybe first-home buyers are buying beyond their means. If you're buying your first home at your maximum level at the lowest interest rate you're probably ever going to get, and you're a first-time buyer, let's look at that. You're probably new to your career, so yes, you should get some wage increase. But if you're a couple, guess what? You're probably going to have kids at some point, so you might halve your earning capacity. So borrowing the most you can at the lowest rate so early on is largely fraught with danger. And a lot of people will blow their dough, and a lot of people find themselves in problems. To your point around top-end market, the APRA chairman, Wayne Bryce, he said the move was intended to head off building risks from a growing number of very large mortgages. So we've got to remember also environmentally, and maybe you can ask Tim McKibben this when you chat with him tomorrow, Tom. It's expensive to build a house at the moment. It's expensive to do a renovation. One of the reasons why is that building materials are 30% more expensive because we can't get them into the country because of COVID-19. So, you know, people are spending largely potentially beyond their means at a point in time when interest rates are so low. So I think it's good intervention. I don't really have a concern with it. Me as a property investor, I have plenty of serviceability. I've been waiting quietly in the wings to strike once we've sort of got beyond this most recent market calibration to probably lift the price up to where they would have been should APRA not intervened 3 to 4 years ago. So for real estate agents, what does it mean, Tom? Maybe you talk about more stock coming on market. You may have less buyers, or you might have to recalibrate vendor expectations around price. You know, as another application of this, Tom.
This is Phil. This is the great thing about doing live streams, right? That you can actually get stuff in the moment. I've had, while this stream's going on, one person that hadn't booked any auctions for quite some time has just booked 1, 2, 3, 4, 5. I've had another person book in 3. I've had another person book in 2. I've had another one just put another one on. I actually think that consumer sentiment is impacted by reading stories in the media. I think that what we're going to see is increasingly more stock. I think that there's a bunch of vendors there that potentially have read the press today and said, you know what, maybe this is the top of the market. Maybe this is the top of the market. And they're going to rush in to take profits. So Robert Trovato saying volume is growing again. He's noticing it. Increasing stock will dilute the pie of bull. Gerard McCarthy, ex-great real estate agent from the inner west, is saying punishing the first home buyer. I'm holding a view, Phil. I'm holding a view that there's so many buyers out there in the marketplace that I don't think you're going to see a 10, 20% drop. I think what you're going to see is the heat and the energy not go at the rate that it is been going. And I do think that it's got a lot to do with the first home buyers. So this is an interesting comment. Crash, it was extremely hard to get finance due to a buffer, APRA lowered buffer in 2009, and on purpose because of half of Canterbury Road, that might be a bit specific there, all went broke. I lost 200K on my investment due to the property crash. Well, Gus, I'm sorry that you did that.
I tend to agree with you, Tom. I think it's just going to take the heat out of the market, and that's the impact that they want. Just slow it down a little bit. Let's just take it easy, everyone. Just take it easy. We've got to work out what's going to happen. We've got to come out of COVID. Let's not go silly. Let's not put in debt positions that they can't, for whatever reason, afford into the future. I think it's prudential. It's smart business.
It's very, Phil, I think it's really important to everyone that's watching this, particularly those that are in the buying and, selling field. You've got to remember, in the last 4 decades, the biggest decline we've had in, say, the Sydney marketplace has been 18% correction, and that correction was made up within 2 years. So what we clearly know is that if you are a person, and you and I both advocate the same thing, and that is that you shouldn't be coming into this business and buying and investing in real estate if you've got a trajectory period of under 5 years, right? But if you're longer than that, it's not going to make a big, significant impact in your long-term real estate strategy. You might have more to pick from in the next month, 2 months, maybe 6 months. But I don't think, trying to time marketplaces is a great idea. I always think, I've always said it, Phil. I think you buy property based on your life, not based on the market, right?
Absolutely. That's typically the best time to buy property. They reckon, what's the best time to buy property? It's when you can afford to buy property. Simple.
Yeah.
And then you worry about, the how, who, where, when, all that sort of stuff. But I know a lot of this on smart property investment, a lot of property investors are banging down their door of their mortgage brokers saying, quick, I want to top up, cash up before the end of October. So, they can borrow money.
Yes,
that's at that level. So you're seeing a lot of that right now. Investors who have the capacity to reserviceability to try and, refinance and top up. So they've got cash ready to roll for when markets start to sort of, recalibrate a little. So strategically, for some people, that makes sense. So there's opportunities in everything, Tom. And for those people who this impacts, and there will be many, I think it's an opportunity to potentially recalibrate your attitude towards debt and what you should be buying. And largely that's going to be first home buyers or maybe first time investors. It might just mean you need to move one suburb further over. Maybe you need to get a 3-bedroom house instead of a 4-bedroom house. Maybe you need to wait another 6 months to save a bigger deposit to get that same dream home. This is the sort of dialogue that people need to be having. And obviously APRA has intervened in this because Australians aren't making the decisions themselves. So let's all grow up a little bit and make those decisions. To that point there, increase your own buffer. I've got a huge buffer in my mortgages, Tom. I'm sure you do as well. Luke Moroney. How you going, Luke? Good to see you, mate. Increase the buffer. Be self-sufficient. Don't wait for the government to tell you the rules. Make your own rules because, Tom, I learned this a long time ago. If you make the rules, you always win the game, mate.
Well, nothing better in life than playing a game that you've set up that you're going to win, isn't it?
Absolutely.
You just reminded me of the song. I don't know why I thought about it. You got to know when to hold. You got to know when to fold. Right.
Absolutely. And speaking of folding, Tom, segue. Our Premier, Gladys Berejiklian, put the cards on the table and have gone, I'm out. And we've got a new Premier, new leader. And I want you to ask tomorrow when you catch up with Tim McKibben, who heads REI NSW, what's going on with stamp duty, Tom? Big thing.
Yeah, well, Phil, Mr. Perriquet, Dominic, I think his name, isn't it? Yeah, Dominic Perriquet with 6 children. I kept thinking about that. A lot of kids there, 6 kids, right? You know how
He's
you
only,
know.
he's only a young guy as well, right? He's only, what, 38, 39?
Yeah, young guy, 6 kids. A year and a half ago, there was a big story across the Sunday press that Mr. Perricay had created some modelling that wanted to make the real estate market in New South Wales have less barriers of transacting. And Phil, he was talking about remodeling the way I think stamp duty and land tax worked in the real estate industry in New South Wales. He's now the new premier. One would think that if he is the premier, this is something that was his baby. He cares about it. He believes in it. And in a nutshell, Phil, it was essentially talking about what having stamp duty rolled into some sort of land tax and amortized over a period of time of owning the property than having to shell out 200 or 300 grand up front, or no matter what, depends on what you're.
I don't know what you're buying, Tom. Jesus.
Well, that's what I can tell you. It's 200. Stamp duty is 200,000 for 5 million. I know that number in my head, right? Yeah, like.
Well,
what do you?
it's still, but he's only been in the job for 3 days. We'll see how he goes. I think he was largely a shoe-in. He's the obvious successor to Gladys Berejiklian, and I've seen an outpouring of positive sentiments towards Gladys. So we've spoken about the work as a premier over the last sort of nearly 2 years, and largely, mate, we've scored her pretty well. But she's been wrapped up in this corruption inquiry. We'll see how that plays out.
I love it when another auctioneer decides to give me a big good on you, Rob. Flattery will get you everywhere, mate.
Mate, Rob's the $2 million auctioneer, mate.
Exactly right. That's what he's going to write next. So, but Phil, this issue, like, what's your view? If there were less upfront costs in the buying process, do you believe that the real estate industry would turn over more real estate?
I'd like to think so, and hence the reason why I think the real estate sector likes it. They're removing. It's funny, on one hand, you've got Commonwealth intervention to try and slow down property markets through this APRA increase to what the recommendations are to the bank. One of the key people impacted by that are going to be first home buyers. But on the other side, on the affordability discussion, one of the ideas around tinkering with stamp duty is to make it easy for people to actually get into property. It removes that big upfront cost, so which can therefore be amortized as a tax over time. So on that hand, the idea is to be supporting affordability and enabling Australians to get into their first home. But on the other hand, you've got to slow the market down. So this is a topsy-turvy supply and demand environment that is real estate. I don't mind it. I don't mind the initiative. Would I buy more property because there was no stamp duty? I'm not really buying $5 million stuff like you, Tom. Is it an inhibitor for me to buy? Not really.
Stamp duty, but Phil, stamp duty, I've got to tell you, stamp duty is the average person says to me, it's just dead money. It's just this dead money. It serves, you spend 20 grand, you paint and polish the floors and put a kitchen in, you get something for it, right? You spend money on a solicitor, you get something for it. The average person in real estate says that money is going, it's dead. And you know what? You don't pay that when you're buying shares, Phil.
No, you don't. But we've got to remember where this money goes. How does the state government operate? They get a little bit of cash from the Commonwealth, but land tax, payroll tax, and stamp duty, the three big drivers of revenue as tax receipts for the government. The government's got to run somehow. Now, if you look at that, mate, two out of three of those are property related. It goes to show you how influential property and the business of property, or the property profession, all wrapped up into one, is in determining the success of a state. It's huge. So greater real estate transactions, good for agents. It means they're probably selling more property, bigger comms in their back pocket. For the buyer, reduces the initial investment. And you would like to think that most buyers improve their ability to afford and maintain and sustain property over time. They get bigger salaries or whatever it is, they're creating more wealth. So They can amortize that and pay it off over time. It's probably a good thing. I don't mind. I think it needs a rethink. Do I like paying stamp duty? No, I don't. It's a check that you write, you don't see it. If I get to choose where that went, I probably sort of feel a bit different about it. But I don't mind it. I'd like to know what Tim McKibben says, because no doubt he's got to be talking with the folks over in the New South Wales government about, what's going to happen here and how quickly is it going to happen. It's a bit of an unknown at the moment, and whether or not that's going to be sort of one of his the new premier's first initial sort of policy moves. Maybe he might give it a crack. He's probably quite familiar with it. He knows what needs to be done.
All righty, Phil. Another week, a lot happened. We'll talk again next week. Next week, we're going to be operating. We're obviously from Sydney. You'll be able to go in and have poached eggs and smoked salmon. Sit down if you can get a table and there's not too many people in there at the one time. And
when your first auction, Tom? We have you actually got the first date? When you're in person. Have you worked that out?
No, we don't. I don't. I'm still at the moment letting you know that I'm working through the issue of I'm flying over to Melbourne to do the block auction, and
you are?
Yes, I am. I'm just trying to work out how I'm going to cope with quarantining for a period of time. And
when's that, Tom?
The 6th of.
Or is that all embargoed? Is it? Is it all live? It must be live, right?
Six. It's live. 6th of November. 6th of November.
Okay.
So
I didn't realise. And are you auctioning all? There's 5 of them, right? 5.
No, I'm only auctioning it. There's a different auctioneer for every property. So I'm auctioning Luke and Josh's property. Two Sydney boys, and they're actually anyone that watched the show, you'll turn around and say they're the guys that you want to win. They're the nicest guys. 2 brothers. I think they're twins, man. 2 twins having a crack at it. And so Phil, I don't know, but I have been told I can quarantine with an open yard courtyard. It's not a police.
For 2 weeks. You got to do that for 2 weeks. How long?
I'm not doing that for 2 weeks. I'm not doing it for 2 weeks. I think the legislation is that you've got to do it you've got to get a COVID test when you get there. If you're an authorised worker, which I will be, you've got to get a COVID test, and that COVID test has to be done within the first 72 hours. And if that COVID test is clear, if you're an authorised worker, you can go to your work and then come back. I'll go to my work and I'll come back to Sydney. Melbourne's not the place that I wanted to be in the last 2 years. Sydney's better than Melbourne. Brisbane's even better.
Good. So you're feeling good? You reckon you're going to get the best price, mate?
100%.
You got the best property? Yeah, 100%.
Phil, let's finish on this point. When you're the auctioneer, you've always got the best property. All right. Signing off. Have a good week, everyone. We'll talk to you next week.
See you guys.